Good morning, everybody, and welcome back to Black Diamond Mortgage's education series. We have been spending every week since January. We actually did a couple classes in November as well, trying to bring you information that we think would be helpful for you, whether you're a real estate agent, a title professional, or a consumer. We want to provide education. We believe that an educated individual makes better decisions. So that's our objective with this course. We hope that you are finding enjoyment and value in it. I'm Zach Falk. I'm a loan officer here at Black Diamond. And today we're going to talk about arguably the most exciting part of financing when it comes to people who live in Montana, and that is construction. Construction financing is highly sought after. It is highly desirable, and it particularly fits the type of people who want to live in Montana. People who want to have no neighbors, people who want to have no HOAs telling them what they can and can't do, people who want to be in the woods or the mountains, and people who want to have full autonomy of what house they live in. The only way that you can check all those boxes is through construction, which is why it's something that is frequently asked for to our office. So today we're going to cover kind of the basics of construction. I'm going to take you through kind of what a typical phone call might look like if you were to call us and ask for a construction loan. And then I want to caution you before we get too deep into it. And it's the most important part, probably because it's the most truthful part. The construction loan process can be very difficult. And that doesn't mean that you shouldn't want it, but it means that you should come to the table with expectations that you also, if you're obtaining a construction loan, are going to have some work to do. And that's okay. That should be expected. It's a big project. I personally have been going through the construction process. I won't tell you how long it's been now because it's rather depressing. And I will tell you because it helps illustrate the whole point I just made. We've been working on trying to build a home since November of 21. And there are a lot of nuances. There are subdivision requirements. There are Department of Environmental Quality requirements. There are all sorts of crazy things that you wouldn't necessarily expect. So buckle up, plan on doing some work, and that is just fine. So let's go ahead and dig into the construction process itself. I talked about a couple of the reasons why. Also, one thing I will say too, for those of you watching this, Dave and I did a very extensive construction class. It's on our YouTube channel. This one will be on YouTube as well. But it's about an hour, maybe even an hour and a half of all the things you need to know about construction. So if there's something that you feel like doesn't get talked about today, go to our YouTube channel, Black Diamond Mortgage, and you'll see that there. It's a good resource. So why would you want a construction loan? Well, maybe one of the things that we see here is, and that I hear, there are no homes available, or no homes available where, or in my price point, or there's no homes available where I want to be, right? So that could be a reason. Maybe you have a desire for a specific type of home. Maybe you want a cabin in the woods. Maybe you want a modern farmhouse. It's pretty common in Montana these days. Maybe another reason is that the homes available aren't exactly what you want. So the things that you can get don't check the boxes for you and your family. Maybe they're too big or they're too small. It could be a various number of reasons. Maybe the cost of the current homes are too high when you look at the market. It's an interesting idea. I hear that one a lot. We'll kind of get into some more details on whether construction solves that or not. Maybe you think that you can build for less than buying. In certain circumstances, that's true. In many circumstances, that might not be. Maybe you're a builder and you want to build your own home. That's also very common. In Montana, we have a lot of contractors and subcontractors, people who are very talented with construction, and they absolutely could build their own home. We'll talk more about that later. Because we have so many contractors and subcontractors, maybe you as a consumer have a family member who is interested in building a house for you, or a close friend. That might be another reason why you might want to build. And maybe the last thing is you already have a piece of land. And that's probably the most likely reason, or the most palatable reason perhaps, for actually being able to go through the construction process is you own land. And Most people, when they own land, they own it with the purpose to do something with it. Even if that means you go out and you shoot gophers on it, right? Like that is a purpose for that land. But likely there's more to it than just that. It's probably not your own custom campground, right? It's probably intended for something. So, what are some of the benefits of construction? Well, the benefits are relatively self explanatory. And it's why people want them. You have full customization of what you want to do. Now, the tricky part of the customization sometimes comes in the fact that you're also limited by your buying power in a construction loan, just like you would be in a purchase. And so the most common reality for people is they get into the construction process because they can design a home however they want. And very quickly they understand just how expensive it might be. And so that plan that you begin with actually begins being maybe pulled apart a little bit because there's not enough money to build the dream. And that's okay. That's pretty normal part of the construction process. The other benefit of building a house is that you get all the details taken care of up front. So when you're buying a house, more often than not, you are dealing with inspections or appraisals or title documentation, and you might not know all the details of this home until part of the way through the process. In construction, you get all those things taken care of at the very beginning. Are there still normal components of a mortgage transaction? Yes, but you don't proceed with construction until you have those taken care of. I'm going to go ahead and read something that I think is particularly important for construction. Um, I'm a big Bible believer, strong Christian. And so this is from the Bible, one of the Gospels, Luke chapter 14, verses 28 through 30 say this: For which of you, desiring to build a tower, does not first sit down and count the cost, whether he has enough to complete it? Otherwise, when he has laid a foundation and is not able to finish, all who see it begin to mock him, saying, This man began to build and was not able to finish. Wow. Straight out of scripture. And hopefully that is both a warning and an encouragement, because construction really is all about planning. If you plan poorly, then the process will go poorly. If you plan well, then the process will still maybe be challenging at times, but it will go much better for you if you have a good plan from the beginning. So when it comes to the construction process, what type of conversations do we have? Well, more often than not, people call and they have this desire to build a home. And so a lot of times my job as a loan officer working with someone who wants a construction loan is to ask a ton of questions. So most of the time people call looking for answers, and instead they're answering my questions. So let's say somebody calls me and they have a project that they want to do. They've never owned a home before, and they're in the category of they believe that they can build a house cheaper than they can buy one in Montana. And so oftentimes the question becomes, well, do you have a piece of land? That's a very common question that I will ask, and that changes the way things go if the answer to that is yes. If the answer is yes, then I like to know, did you finance the land? Did you need a loan to buy it, right? Or do you own it outright? Where is it? Do you understand what you can do with it? That's important. There are certain restrictions on properties that hopefully when you buy them, you're aware of them, right? How is it zoned? Can it be set up? Does it have utilities on it already, or do those need to be installed, et cetera, et cetera? And then let's just, for the sake of this scenario, say that they don't have land, because most people, generally speaking, don't have land when they want to start the construction loan process. So then the conversation shifts more often than not to capital, the cash position of the people that I'm talking to, which gets us into an important distinction. There are two primary types of construction loans. There's one, the first one's called a one-time close construction loan. Sometimes you'll hear that also phrased as construction to permanent. And the other option, option two, is a two-time close, sometimes referred to as a traditional construction loan. And these two are quite different in how they function and in what is needed to obtain them. So I want to spend a few minutes before we come back to our scenario where someone's asking me how to get a construction loan done. Let's define these a little bit better because it matters for this scenario. So a one-time closed construction loan, it is generally speaking the construction option available to people that don't have a lot of money in the bank, as a general rule of thumb. So there are construction products available with as little as 0% down, which is rather crazy and also very cool. We've done a couple here at Black Diamond. The most commonly used one for the zero down construction option would be through the VA. So the VA offers 0% down on a normal purchase, and they do the same for construction. USDA, sometimes also referred to as RD, Rural Development, they also have a 0% down construction loan. FHA has a 3.5% down construction loan, and conventional has a 5% down construction loan. So the opportunity for someone to get into a brand new house with very little capital does exist. And so when you hear me say that, it sounds really, really great. And it is great. It's an excellent product. The flip side of the one-time close, everything has pros and cons in life, right? And as a general rule of thumb, the lower amount of money that you as a borrower bring to the table on any transaction, purchase as well, but particularly construction, reduces the amount of flexibility and control that you have over the process. So more money in the bank that you can bring to the table equals more control, more flexibility. Less money in the bank equals less control, less flexibility. And that's okay, because it just depends on your life circumstances when you go down this mission. So what I mean by less control is, let's say our caller that had called me would like to take a construction loan and they don't have a large amount of money in the bank, but they have enough for 5% down on a $400,000 bill. Well, then what happens for us is we need to dig deep into the details at the very beginning. So the construction process requires a general contractor. So in this particular construction product, remember, we're talking right now about the one-time close. It does not allow for you to self-build your own home. So you have to hire a general contractor. And the general contractor is very important to the success of the loan. More often than not, where we see trouble is when the builder and the buyer are not on the same page. And oftentimes we spend a lot of time up front to make sure that everybody's on the same page. So in one-time closed construction, we are going to actually vet out the builder that you choose. They have to go through a series of checks through a lender that we choose, where they will actually look at references. They will look at past work behavior, work performance. And their whole goal is that they want to make sure that this builder that you choose is reputable and will be able to build a home that they feel comfortable lending a large percentage of money on. 95% of the total build is coming from this lender. So they need to have a good feeling that they can trust this builder. So that's a big part. All this is, by the way, happening at the very beginning. So your construction loan has not begun yet. This is happening at the very beginning. So you identify a builder. Then with that builder, you work together to create plans. What is the house going to look like? What are the elevations? What are the drawings? That generally leads to what is the budget. And I encourage a lot of people. So in this phone call that I've had with somebody who's calling in, my first question, more often than not, once we most of the time people want to talk about their plans, and that's great because I want to listen to them. But generally speaking, very early on, I ask if they have had anybody look at a mortgage application for them. The reason that's particularly important is if you just do all the steps I described, you find a builder, you design your plans, you have your budget lined out, all your specs are done, and you haven't figured out your budget, well, then you might look like the person that the Gospel of Luke was talking about, because you planned poorly. Because maybe you go talk to a mortgage professional and your current income scenario does not support the design that you created, and now you're left having to redo some things, which again is okay. That's pretty normal for this to happen. But I encourage people to get into the mortgage office sooner rather than later so that that mistake can be avoided. So again, this is all in that one-time close bucket. So we want all the time when I'm on the phone with a consumer, I want to get to where I can review their financials, because those financials are the bedrock for which construction product we choose, and then also the success of that product as it goes through the normal process. So let's say for this person, they have identified their budget, they've talked with the loan officer, they're approved for the loan, they've chosen their builder, they've developed their plans and their specs, they've completed a budget. And by the way, in the email that we send out that has the link for this class, I'm including a thick packet of information on construction that you will absolutely want to read. What reminded me of it is there's a budget spreadsheet that we created to help you figure out how to do this. And the budget that a lender requires for this one-time closed construction product is very specific. It's very detailed. And so we've done a lot of the legwork for you. So feel free to use that resource. If you're watching this later on YouTube, call Black Diamond and we will make sure you get a copy of this packet, because you do need it. It's really important to the success of making sure that your plan is correct. So you've got all these things lined up. At that point, you begin the construction loan process. So sometimes people think that that can happen in a couple weeks, a couple days. In my experience, the process of finding a builder, getting your plans together, doing your budget, that can take as much as 3 to 4 months before you feel like, and sometimes longer, depending on the complexity of your build. So I always want to remind people that the construction process, if you have a lease ending in 2 months and you need to get out of a rental, the construction process does not solve that problem for you. It requires time. And that's okay. Again, it's all in the vein of making sure that we plan appropriately. But you need to allow for some time for these things to take place. You have a day job. Maybe you have kids. Normal life continues to go while you try to work on a construction project in the background. Okay, so at that point, the construction process, the loan process begins. The thing that's the most important, probably on this one-time closed construction product, is that once everything is inked, the budget's there, the plans are there, the loan agrees that everything looks good, and you close on your construction loan, there can be no changes. And that is often the most challenging thing for people to come to terms with. And again, remember, it's the lower amount of cash equals less flexibility. And that's one of the areas where this is seen. The lower flexibility is in the fact that you can't make changes. And if you talk to people who've built homes, what do they all say? They say that when they get into the house, the frame is up and all the rooms are in there, and they start to look at it and they go, what was I thinking? I don't like how that is set up, and they want to change something. If you're in the one-time close category, it's kind of too bad. Now, remember, the reason you're there is still a positive reason. You're getting a brand new house for a low down payment. That's something that's worth recognizing as a good thing. That's the trade-off that happens. Okay, so I've talked to this person. We've figured out that they have a low amount of money in the bank. I've sent them down the route of one-time close. I've sent them the packet. They're working on getting everything taken care of with their builder and their budget and their plans, and we'll create some follow-ups for them to come back. Well, let's say that on the other hand, the person who has called and has asked for a construction loan has a large amount of money in the bank. Well, then that probably turns us to the other construction option that I mentioned earlier, the traditional construction loan, sometimes known as the two-time closed construction loan. This one is in that vein of a much higher amount of flexibility. Depending on your circumstances and your past experience as a builder, it's likely that you can build your own home in this category and still have financing available. Changes throughout the build process don't matter as much. And the reason is that in the one-time close space, the lender is managing all the funds. In the traditional construction space, you as the eventual homeowner, you are managing the funds. And so it puts you in a position of authority. If your builder, for example, wants money for something that they've said is completed, but you don't agree, you control the purse strings. Now, you do that in concert with a banker. Two of you work together, um, but you get a lot more autonomy on how the process goes. And what that leads to is maybe not needing as many details done up front. You're going to need a basic budget. You're going to need a basic idea of what you're building. The bank needs to agree that that can be built for about that price. But they're actually approving you in this second construction loan space for essentially large line of credit. And that line of credit can be used to build your home how you see fit. In the two-time construction loan space, at the end of the construction process, you eventually will refinance, take a traditional 30-year mortgage or 15 or 20, whatever you want. Once your house is built, pay off the bank and move on with your life. I would say that the opportunity there is generally nicer, but again, it requires a lot more cash. Let's say the person calls me and they don't have all the cash, but they have a lot that's worth $300,000. Same thing. We more often than not are going to recommend the two-time closed construction option because that land, the value of that property can be collateralized to use that as your equity in the actual project. And so it ends up getting you into a position where that flexibility and that control that you ultimately want is available to you. So that kind of highlights the two differences. There's, of course, so many more differences, but those are the big ones. And our job at Black Diamond ultimately is to try and get you to figure out which one makes the most sense for you. And before I kind of end that line of thought, there is, I suppose, one additional option, and this works really well for certain people. And we see it a fair amount in Montana, but it's called a builder spec construction loan. And it's technically not even construction financing. But one of the things that's common is let's say that you as a homeowner would like to go buy a brand new house, but you don't care about the details or the customization or the location or whatever of the house. You just want a new home. Maybe old homes have an allergy issue for you and you need a new house, but you don't want to do the construction project. Or maybe you don't like renovations and you don't like fixing your home, so you want a new house, but you don't want to do construction. Well, builder spec is a great option for that because the builder themselves is actually the one who goes through the construction loan process. And you as the consumer, you don't have to deal with the bank. You don't have to deal with us. You don't have to deal with the budget or the spreadsheets or the plans or the architects. Basically, you end up getting a brand new house at the end, and the builder does all that. What are the trade-offs? Sounds really good, right? There's always trade-offs to everything that we've talked about. The trade-offs are less customization. So perhaps you can buy a house, and more often than not, a builder will say, you get to choose between these three colors. You get to choose between these three flooring types, and you get to choose between these three utility packages, or not utilities, appliance packages. And so you get very limited amount of control. That's the reason that that's the way that it is because a builder wants to control their costs to make sure that they are doing what they've agreed to do with their banker who's providing them the financing. So that's another good option. And then in the mortgage space, we actually just call that a normal purchase. Oftentimes a purchase agreement is signed at the beginning of the process, and then we don't necessarily do anything on the lending side until the home is complete. So that can be a good hybrid approach to getting semi customization and skipping some of the detail that goes with the construction process. One of the other things I wanted to highlight to help everyone who goes through construction is make sure early on that you have a contract put in place with all parties involved. So if you hire a builder to build your house, they're going to want a contract. And if they don't, you should push for one. If you're hiring a builder through the two-time close, same thing. Make sure you get a contract in place. That contract is designed to protect all parties, to make sure that everybody agrees with the plan, and it helps you avoid potential issues in the future. So ultimately, only other thing that I think is particularly important, I'm running out of time. Like I said, we have another video that goes into deeper depth. Construction really is an intense animal, and we want to help you with it. So the best way to learn the most possible is to set up a call with one of us, and we can go through it. But kind of the key takeaways are: the more equity that you have, the more cash that you have equals more flexibility, right? We want to make sure that you get everything taken care of up front. And just so you know, Black Diamond Mortgage, we have no preference between whether you do one-time close, two-time close, builder spec. Our job is to help get you into the construction product that makes the most sense for you. And that's going to vary entirely based on your details. Lastly, there's really no cost difference between those two products either, the one-time close or the two-time close. There's a myth that exists that if you have to close twice, that you're paying two sets of closing costs, and therefore the amount of money that you're spending to get this loan is more expensive. That's not true, simply because on the one-time close side, you have a lot of administration to pay for people like the lender to manage the draw process and to work with the builder during construction. So again, we don't care which one you go, but we are going to advise you based on what we think makes the most sense for your scenario. All construction loans are interest only during the construction period. Some, depending on the product, we can actually figure out how to keep you from having a payment at all during the construction process. That can be kind of nice if you have a rental that you're renting and you don't want to make double payments while your new house is being built. So you can talk to us about that as an option. And generally speaking, all construction loans, we don't advise you to take poor terms, but we advise you to not worry too much about the interest rate. And I know at the surface that sounds crazy. Like, what do you mean? Of course I should worry about the interest rate. Well, yeah, in theory you should, but remember that construction projects are all short-term loans, and everything that you do up front should be focused on how can I execute my plan, because you're going to restructure that loan in the future more often than not as soon as the house is complete. So those are kind of the key takeaways. Construction, like I said, is a deep process. We love it. We want to help everybody figure out how to navigate it, and it all begins with a good plan. And if you need help with the plan, more than happy to help get you down the right path. That's what we do more often than not. I want to open it up for questions. We have just a couple minutes left here. Anybody online or anybody in person have a question they'd like to ask? The question was, do these loans include the purchase of raw land? It's a great question. The one-time close option that I mentioned, which is the lower down payment and the more strict on the details, yes, you can include the purchase of land in that loan. So essentially, it becomes a line item of the budget. $150,000 for a piece of land. There it is. It sits right there in the budget. The trickiest part, to be totally honest, is if you're buying land, this is important for real estate agents to know. You have to be upfront with the seller that they might not get paid right away. And that's okay. Sometimes land takes a while to sell anyway. So the construction loan process, because it's complex, takes longer. And so the seller might have to be under contract for, 2 to 3 months or something like that before it closes. That's probably on the long end. But it's a communication thing. So yeah, long story short, you can include land in that construction loan process. And we've had people do that, and pretty cool when it works.
Name some of the budget busters, such as site improvements, architecture, labor, that will often just get completely omitted.
Yeah.
Until they get with the lender and get it.
The question was, name some of the budget busters that people don't necessarily consider. I think a significant amount of forgotten expense is actually in the infrastructure of the home. So there's money, depends on where your lot is, but if you have an undeveloped lot, more often than not, you have to put a road in, you have to put a septic tank in, to put a well in, and depending on where the property is, maybe that well has to be dug really deep, and that's really expensive. Power is a big deal because I don't know if you remember, but transformers were like a major issue for builders because nobody could find them. So there's probably 100 to 120 grand in infrastructure alone that most people don't consider when they go to put their housing plans together, which it makes sense because you're thinking about the house. So that's a big one. I think that there are a lot of fees that go with paying an architect to do the plans themselves, or paying for surveys or permits, depending on where your lot is. For us, in my personal circumstance, it's been surveys, it's been DEQ review. We had to pay a consultant to do that for us. There's thousands of dollars hidden here and there that you absolutely have to be careful of. And so, one of the ways lenders do that is we will always have you include a contingency on your construction project. And that's generally around 10%. And the objective is to try and help manage for those budget busters, as an audience member rightly called them. So, does that answer your question?
Yeah, and don't
Yeah.
forget, every single item includes labor.
Yes, every single item includes labor. So, and yeah, yes, it's a large percentage of a home build for sure. Any other questions? Okay. Well, you know where to find us, 406-862-4999. That's Black Diamond Mortgage Loan Hotline. Call or text that at any time. We honestly want to help anyone and everyone. So reach out to us, and thank you for spending your beautiful Wednesday morning with me. Have a good day.